about a $200 to $300 billion opportunity by 2030. And not just that, right? Companies are striking strategic partnerships, which means the industry is not standing still. And then just the near term, FY27 is likely to look better than FY26. So what we're going to do is try and address 5 key questions right now. One, do IT companies face the risk of tech obsolescence? Secondly, can they pivot fast enough to capture the opportunity? They've done that in the past. Can they do it again, or is this time going to be different? 3, what do these partnerships bring to the table? Can it boost the kind of value that they do, the capabilities, and increase new areas of work? And 4th, jobs. That's a critical question, because IT is not just a sector. It contributes, 7.5% to India's GDP. It directly employs nearly 6 million professionals. So the impact of AI disruption on jobs is going to be very crucial. And finally, the question beyond IT services. There are data centers which are going to be set up. So what are the plays in the ancillary AI ecosystem? This is what we're going to try and address now in the next 30 minutes on our show with Nilesh. So Nilesh, let's begin, right? You're negative on the Indian IT sector. For how long have you been negative? Because what we've also seen is a confluence of AI disruption and macro slowdown. So since when are you, have you been negative on IT sector? And you said it's not all gloom and doom, right? It's not that there is an existential crisis. So at what point do we start looking for value?
I think the broad perception of IT is that it's a growth sector. And the challenge has been for the large caps, the big 4 or 5 companies, which have pretty much been growing in high single digit or maybe at 10 to 12%, which obviously is not a great place to be for a growth investor. So I clearly believe that if I were to kind of look at, say, over the last 30 years, every 10 years, the growth rate of the big IT companies has kept falling and falling steadily.
Yeah.
So right from those days of 40, 50% to 20, 30% to now 10 to 15%. And maybe we'll get into a phase where probably the growth rate will be probably 5 to 8% in rupee terms. So that's where it is. So I don't think there's a challenge of survival because spending on technology will continue. I mean, I've never heard any big company ever say that we're going to cut our spending on technology. So as long as there's going to be spending on technology, there's going to be work for our IT services companies. The challenge is only that the growth rate is going to be lower. And the current valuations are not supportive of that.
So if
change.
The growth rate is 5 to 8% in rupee terms, right? Then in dollar terms or constant currency, it will be a little lower given the rupee depreciation that takes place annually. What are the appropriate valuation multiples?
I'd probably think that the big IT companies probably somewhere around 15 times trailing earnings. They currently trade at 19, 20 times. Somewhere around the 15 types kind of should be a good number. I think that would put them like at a 25% discount to the Nifty earnings. Nifty earnings will probably grow at about 12 to 15% because the outlook has changed or improved for Nifty companies. So I think versus a 12 to 15% growth rate for Nifty companies, getting 20p multiple versus that for a 5 to 8% growth rate or maybe at max 10%, probably think 15, 16 times
so
should be
about
a
a
good
10 to 15% correction from here on, assuming the IT companies, when we looked at the consensus.
Did not. Therefore, the president does not have the power to interpret this law in such a broad way as he did. Now, what is the impact of this? Immediately, this is going to set off the food fight of all food fights in terms of how companies that paid those tariffs last year get reimbursed. The president of the United States has said that the U.S. government will in some way have to reimburse those tariffs, but the cost is so high to the Treasury. The president has suggested that the U.S. government may not be able to do that. So what kind of a situation are we going to have for companies that are trying to get reimbursed this year? That's going to be a fascinating fight. Whether or not the government tries to slow walk that or find some loophole or carve out, we'll see deeper down in this decision by the Supreme Court if they've given any guidance as to how that process should work. We don't have that right now. That might be material for a number of these companies, guys. So as we look through this, what we're seeing here is a striking decision by the Supreme Court against the President of the United States. We're also seeing here a lengthy dissent here from Justice Kavanaugh. So we'll get into his logic on why he's dissenting as we dive deeper into this, guys. Back over to you.
Are you going with a 6-3 vote?
Yeah, I don't have the vote here in front of me, Carl. We're still looking at the actual language of the decision. So it looks like I'm being given here by our fantastic producer. Yes, 6-3 decision. So as I was reading that, we've been able to pin this down. So yes, 6-3 decision. So that is not the 9-0 decision that we've been talking about even on Squawk Box this morning, the possibility of having a 9-0 unanimous decision. This is a divided court, a 6-3 decision here ultimately. And we'll wait for the president's reaction. The president has said this is one of the most important decisions the Supreme Court will ever render because it gives him unilateral negotiating power, the leverage that unbridled tariff authority gives the President of the United States in terms of negotiating with countries around the world is enormous. The President has enjoyed that leverage in order to force countries to the negotiating table. The President has said if he loses this case, that will rob him of that leverage and deprive him of the ability to help the U.S. Government in all of the negotiations that it has everywhere around the world. I would expect a blistering statement on Truth Social here at some point shortly.
Thomas, Kavanaugh, and Alito were in dissent here, but importantly, Gorsuch, Barrett, and Roberts, obviously, part of that majority. Eamon, you know, backing up a bit, I mean, it does simply seem that the Supreme Court has reaffirmed that the Constitution gives Congress the right to levy taxes and tariffs and not the president, correct?
Yeah, that's exactly right. And the Congress would have the authority to designate that to the President of the United States if they wanted to. And what the President did by looking at this IEEPA law, remember, that's the law, the International Emergency Economic Powers Act, that the President cited as giving him the authority to impose these tariffs on Liberation Day in the first place. What the President did was stretch that law a lot farther than it had ever been stretched before by saying that this power to regulate international commerce also includes the power to tax it. And taxing power, of course, under the Constitution belongs to Congress. Now, they could send some of that power down Pennsylvania Avenue to the president if they wanted to. And what the Supreme Court is saying here is, well, they didn't do that in this law. The president is arguing that they did, but they certainly didn't. And if Congress had wanted to do that, they would have done it in a very explicit way that it wouldn't require a tortured reading of the statute to come up with this interpretation. It would just say it in its plain face in the law, and that's not what happened here. So this is a huge reversal for the Trump administration. The administration, we should say, has suggested that if they lost this case, they would have a number of other authorities, and they would be able to convert their tariffs to these other authorities in relatively short order. What are some of those authorities? Section 338, Section 232, Section 301, Section 122, all sorts of other authorities that the U.S. the executive branch would have to impose tariffs are in play here, but all of them require some sort of lengthier process, and they don't give the immediacy that the president has really enjoyed using this novel interpretation of IEEPA, which has now been struck down. You have to go through an investigation. You have to have a report and a finding. All of that takes a certain time on the clock in terms of the calendar. That doesn't give the president the unilateral, immediate, sort of truth social, real-time power to impose tariffs that he has believed he enjoyed all year long. This is going to be deeply, deeply frustrating for the President of the United States.
And just to put a number on how much we're talking about, according to estimates out there, $133.5 billion of tariff revenue has been collected under IEEPA specifically in fiscal year 25 and fiscal year 26 through December 14th. It's according to Cato and some of the estimates. So $133.5 billion. The question is going to be on the potential implications now about whether that gets returned and to who and how that all plays out.
And that's why I say it's going to be a huge be a huge food fight in terms of how that money gets distributed and who it gets distributed to. $133 billion is our best guess, Sarah. You're right. That is the current number. It's probably higher than that. We just don't have the latest numbers in yet. But remember, it's not all of the tariff revenue that the administration has collected. $293 billion have been collected overall in the president's second term now. So a big, big chunk of the president's tariff revenue, but not all of it, is now being struck down by the Supreme Court here.
I just wanted to, the market reaction is sort of interesting and worth discussing, Mike, because the retailers are actually gaining on this. They're the ones who have paid the highest tariffs because they manufacture all their product overseas. It's notable because we sort of expected this to go this way. The oral arguments, I think, on November 5th seemed to suggest that a majority of the justices were skeptical about this.
Yeah.
And the Polymarket and Kalshi odds actually favored this kind of ruling going against the president.
For sure.
Keeping all that in mind with the market
It's not out of the blue. The response does seem more narrowly focused and kind of isolated to perhaps the biggest beneficiaries if the tariffs go away. I did also note some of the non-U.S. ETFs bounced huge, like the India ETF goes vertical. Okay, all this idea that maybe there'll be a little bit of relief. I mean, the one thing that's hard to calculate is investors had talked themselves into coming into this year. We were anniversarying the tariffs. That's a receding factor in the investment equation at this point. And let's have a clean policy year when we don't have to worry about whether we, or give or take on tariffs. I'm not saying it's going to be taken as a negative, but I do think that, it raises uncertainty on policy, even if it's in a positive direction for some companies.
Well, two things. One is prices aren't set automatically when a tariff is instituted.
Right,
so
exactly.
Turn to the calendar page. That's reflected in a lot of the PMIs today.
Yeah. I don't know why the government would be unable to return the money. The money's fungible. They're raising billions and billions every day.
Who are you actually returning it to? If 90% of the tariff cost has been paid by the U.S. consumer, are you giving it back to them?
Well, that's the thing.
Well, that's a controversial statement.
I mean, first of all, I know it's a controversial statement. Obviously, Kevin Hassett disagrees with it, but my point is, where's the money going to go?
There are companies like Costco that have sued to collect the money.
There are customs documents that say who actually cut the check.
And so that's who
gets it back. What they do with it, I guess we'll have to see.
That's another question. What do you do with it?
Well, and right.
What, you're suggesting a giant class action on behalf of American consumers?
Yeah, I'm suggesting everything's free at Costco for a week. I don't know.
But the administration claims that a lot of it has been borne by foreign suppliers to fight for market share. If that's the case, first of all, you kind of have to prove that. Right. And do they get it returned? That's the question.
Yeah. Also, what it does to other countries now and their calculus on negotiating overall trade with America.
Right. If, in fact, we're still working toward new trade deals. Bilateral deals.
Let's bring in Jamil Jaffer, founder and executive director of the National Security Institute at the Anthony Scalia Law School at George Mason. He's also on the board of directors for the Greater Washington Board of Trade, has served in the Justice Department's Office of Legal Policy. It's good to have you. Thanks so much for the help today. We need it.
Absolutely. Well, thanks for having me on.
What is your overall reaction to the decision?
Well, look, a very clear rebuke of the Trump administration's effort to impose tariffs in this way through the International Economic Emergency Powers Act. As you guys were talking about earlier, obviously the president has a lot of authorities he could be using. He's chosen not to use them thus far. But at this point, he's going to have to go to those authorities and not rely on IEEPA. The court came out pretty clearly, 6-3, Justices Gorsuch and Barrett joining Justice Roberts' opinion. Justice Gorsuch writing separately to explain exactly why he joined that opinion in full. But he took on a couple of other ideas in some of the other opinions, as well as the dissents, strident dissent from Justice Kavanaugh and Justice Thomas as well. So a lot to sort out here, but a very clear rebuke of the Trump administration's effort in this way.
Right. I'm just looking through the majority here. The government cannot identify any statute in which the power to regulate includes the power to tax. The court is therefore skeptical that in IEEPA and IEEPA alone, Congress hid a delegation of its birthright power to tax. Does that framework, how do you think that's going to be received by the legal community?
Well, I think that's probably right. I mean, look, when Congress decides to delegate a power, it has to be clear. The court's engaged in a number of decisions in recent years to make clear that if Congress is going to delegate authority, particularly broad grants of authority with no bounds around them, as the president would read IEEPA in this case, it's got to do so with real clarity. It's this whole idea, this major questions doctrine that you've heard a lot of talk about. And so the court's reiterated that a number of times. That didn't used to be the court's view. It is the court's view now. And I think that's where the legal community is going to say, look, we could see this coming from these recent cases, limiting the ability of Congress to delegate its authority and making sure that if it does so, it does so in a very clear, specific way.
I mean, the administration has been prepared for this, right? It didn't come in the first few weeks of the decisions. We sort of knew, and they've got to be gaming this out. I mean, there's Section 232, which is sort of one of the easiest existing authorities that he could use for tariffs. There's also Section 122 of the Trade Act of 1974, where he can do 15% tariffs quickly, but only for a 6-month period. There's Section 338 of the Tariff Act, which allows up to 50% tariffs, but it's never been invoked. Section 301 of the Trade Act. I mean, this is kind of technical stuff, but there are other means for him to impose these tariffs, aren't there?
No, that's exactly right. And so, you know, some of your viewers might be wondering, well, why did the president just go ahead and impose those up front? One, taking the view that they had of IEEPA, I think they were thinking a couple of things. One, they could impose broad tariffs, move them around as they chose to, in part because Congress didn't put any bounds on this in theoretical authority in IEEPA. They simply said the power to regulate imports. And so as a result, the president said, well, I can tax those imports, I can impose tariffs. That's a form of regulation. Now I've got complete free run room. I don't have to make any findings. I don't have to make any decisions other than there's an emergency going on, and this is my chosen way of solving for it. With all these other statutes, to your point, there are limitations. You have to make certain findings. You have to submit to Congress. You can only do it for a certain period of time. So it just makes it difficult. And so the president's, I think, theory was, if I can get this through IEEPA, I've got broad authority. I can keep moving them around. If I make deals, I can reduce them as necessary. And so I think that's the idea here. Now they're going to have to go through. They probably do. If the administration was planning ahead, which I think I'm sure they did, they probably got a plan for how they will re-implement a number of these through these new authorities. They'll just have to go through the process of doing that. They probably have a break the glass plan ready to go, and they'll deploy it in the next hours, days, weeks.
What do you make of, I mean, from a legal perspective, the whole idea that we were just talking about before you came on of these refunds? Because I would assume the courts will be involved here as well in some fashion. It's very much unclear to any of us exactly how that would work. Do you have any ideas, Jamil, in terms of what at least a sequence of events may occur as a result of that?
You know, I mean, this is exactly the right question to be asking. I think the question the administration tried to raise is saying, look, the court shouldn't make the mistake of doing this. It's going to be a huge debacle to have to get these refunds back to people. And yet now we're in that position. The court did not take up that idea that simply because it would be hard, the court can make a decision on the law that it doesn't think is correct. And so the administration, again, hopefully has been preparing for this day, has a plan now how to do it. But what will ultimately happen, I think, is it'll go down to the lower courts. The lower courts will then have to handle this one specific case that's before them and provide the refund in that case. And then the question is, will the administration create a mechanism for all other similar situated plaintiffs? Will they wait for the court to come in and impose a requirement like that in some sort of a broader suit? Or people have to sue individually to get their money back. And, you know, it's open season right now. We don't know for sure. And I think that in part was why the administration was saying, you're going to cause a whole lot of trouble if you do this. And the court, I think rightly, said, look, we're going to do the law. You all figure out the consequences.
Yeah, that's there was so much sort of parlor gaming around I suppose a delay, the length of the time. We thought we were going to get this decision, some thought November or December. And per our earlier discussion, Jamil, about restitution, how do you think we should think about the lack of consumer restitution? This is going to be a corporate restitution story.
Well, that's the really interesting situation. Obviously, the president has made the argument that, in fact, the economy is doing better, that the economy is expanding, and that the tariffs have actually been paid by other countries. That's, I think, a debated proposition. The Fed came out with some numbers earlier this week that suggested that wasn't as true. We had seen some earlier numbers, by the way, that did suggest that consumer prices have not gone up as much as we had thought. So the answer to that question about how much consumers have paid is a little ambiguous. Although I think the general economic consensus is that ultimately, whether it's today, tomorrow, or next year, consumers will pay the price of those tariffs. And so now, because the companies are going to get reimbursed, the one party that's out on these tariffs will be the American consumer. So whatever higher prices we did pay, we won't see that back. The president may have to scramble now, particularly as we're in the lead up to a midterm election. He may try to go to Congress and say, look, let's give the American people a tax refund of some sort in order to address this concern. But that will require an admission that American people have paid higher prices. He hasn't been willing to say that yet thus far.
Jamil, do you think this has any implication or bearing on the trade deals that have been negotiated under this whole tariff framework?
Well, I don't think so, because, you know, the countries have come to the table. They've made deals with the United States. They've made agreements. Those agreements are as binding as anything else. You know, they're executive agreements. They're not like they're treaties. But, you know, the countries could bail out on them. I think they would do that at their peril, because you'll see the president use other authorities to come in and levy, you know, sort of punishment upon those countries if they walk out. So the deals are still in place. They may now not, the countries that haven't made deals, or the countries that have made deals and they see another tariff in the future or a threat of a tariff, they may look, you know, questioning at that. But the president has a number of authorities, as we were discussing earlier, as you raised. And so, look, at the end of the day, he's got a lot of tools in his toolkit. He just chose one that was very broad. He now doesn't have that one taken away. And now we're going to see how this plays out. And by the way, the president has a lot of other toolkits to put pressure on other countries to do trade deals beyond just tariffs. He's chosen that one because it was effective and it did the job.
Yeah, although implementing those alternative tools is going to introduce some, perhaps more volatility into trade policy and certainly the markets. We'll see what that brings us. Jamil, thank you for the help on that important discussion in the wake of that decision, which is only about half an hour old. In fact, let's get back to Eamon Javers, talk more about what you might have been reading. Eamon?
Yeah, Carl, I want to just give you Brett Kavanaugh's dissent here. It's a 63-page dissent, so if you use page numbers as an indication of intensity, Brett Kavanaugh feels very intensely about this. And what he's arguing is that the Supreme Court is wrong to have done this. Now, he's on the losing side of this vote, so it doesn't matter, but here's his argument ultimately. He says, the sole legal question here is whether under IEEPA tariffs are a means to regulate importation. Statutory text, history, and precedent demonstrate that the answer is clearly yes, writes Kavanaugh. Like quotas and embargoes, tariffs are a traditional and common tool to regulate importation. So if Kavanaugh had the votes on the court, he would have said that this statute does authorize the president to enact those tariffs. He also raises two possible downstream negative effects that you guys have been talking about. One is this question about refunds. What Kavanaugh says on page 63 here of his dissent is the court is saying nothing today about whether and if so how the government should go about returning the billions of dollars that it has collected from importers. But that process is likely to be a mess, as was acknowledged at oral argument. So that question about what happens to this, to the refunds, is not really being addressed by the court. That's going to have to get kicked back to the executive branch for them to figure out, and it is likely to be a mess. Also, Brett Kavanaugh raising the concern here in this dissent that the court's decision could generate uncertainty regarding various trade agreements. That process, too, has been difficult. And that echoes, guys, the point that the President of the United States has made several times, which is the IEEPA unilateral tariff authority that he was claiming gave him enormous leverage to get other countries to the negotiating table and cut deals that benefited American taxpayers. Now that leverage is gone, and you wonder how many countries are going to try to come up with an alternative to deals that they've already cut, or to get out of finalizing deals that have been announced but not yet papered and signed. So a lot of foreign policy implications here, a lot of trade implications, and of course the political ramifications will be enormous, guys.
I mean,
yeah, sorry, Sarah.
I was just going to say, ultimately, I think it gets to, you know, having the president have executive flexibility in foreign affairs, right? Is that
right.
That's ultimately what's at stake here for this administration, and what seems
that's
like
the way
what
the
dissent brought up.
administration. That's exactly what the administration argues, and what the Supreme Court here is saying. Well, you know, that flexibility is not in the Constitution. So unless Congress legislates it, you don't have it.
Right, and has not been used by any other president.
True.
Right.
At least as a tool in terms of those relations. Eamon, thank you. We'll be obviously getting back to Eamon Javers throughout the hour for more. Let's get over to Dom Chu now, though. Let's get a look at some of the individual stocks that are moving as a result, perhaps, of this decision. Dom.
Sure, and to frame that discussion around kind of the certain parts of the market that have seen more relative volatility to what's been happening with tariff headlines, certainly since April, and some of those so-called Liberation Day headlines and policies and the market volatility that's been associated with them. Consumer and retail is going to be a huge focus right now, and I'm just going to give you a look in charts to kind of give you a visual context about what's happening with the markets intraday. This is an intraday chart of the S&P 500 Consumer Discretionary ETF, the ticker XLY. That move spike higher has been part of the broader market, but we've seen more relative upside in that consumer trade. Now, if you take a look at another ETF that more equally weights some of these retailers in that, this is the Spider XRT ETF. If you take a look at that one, you are also seeing a bit move higher here, but then kind of leveling off a little bit more. So as we watch the consumer trade in charts, that's what we're looking at intraday. Three parts of that consumer trade to focus on an intraday basis. We are seeing some outsized gains in certain parts of the market with regard to some of the kind of retailers that sell those goods that have been impacted. Take a look, for instance, at shares of Best Buy, also RH, Williams-Sonoma, Wayfair. Some of these names have been some of the more closely associated ones with tariffs. Best Buy is actually lower by 0.5%, but RH, Williams-Sonoma, Wayfair on that kind of furnishing side moving higher. Another part to keep a close eye on now is also the apparel side of things. Gap, Capri Holdings, VF Corp, Lululemon, and Urban Outfitters. Urban Outfitters lagging just a bit here, but generally solid gains across the board for those apparel retailers. And I will finish, Sarah, with this. Take a look at some of the dollar or discount retailers. Target, not so much that discount side of things, but it's up 1.5%. Kohl's on the department store side, Dollar Tree, Dollar General, and Five Below. They are off of their session highs, but they have been some of those relative volatile plays with regard to the retail trade. We'll keep an eye on those, Sarah. I'll send things back over to you.
Yeah, generally overall, though, market pretty resilient given some of the uncertainty that this raises about the tariff policies. Thank you, Dom. I'm Dom Chu. Just getting some lawmaker reaction, guys, to already from both sides of the aisle. Rand Paul, a Republican, in defense of our republic, the Supreme Court struck down using emergency powers to enact taxes. He adds a little spin on it here. The ruling will also prevent a future president such as AOC from using emergency powers to enact socialism. So maybe that on the plus side for him. Okay. Senator Elizabeth Warren also commenting. Remember, she's been pretty adamant that Congress owns the power here to do tariffs, but she doesn't even sound that happy about this. She says, no Supreme Court decision can undo the massive damage that the Trump tariffs have done to small business, American supply chains, especially to American families. The court has struck down these destructive tariffs, but there is no legal mechanism, she says, for consumers and many small businesses to recoup the money that they have already paid. So already, again, that food fight, as Eamon called it, over that sort of issue. She said instead, giant corporations with their armies of lawyers and lobbyists can sue for tariff refunds, then just pocket the money for themselves.
The backlog.
Never satisfied.
The backlog of these courts, these demands for refunds is going to be insane. It's also been pointed out that we get this decision literally days before the State of the Union address, where he ostensibly is going to celebrate his crowning achievement, that is tariffs, in front of the very justices who just ruled against him in the front row.
Yeah, it's a good point. Although, you know, President Trump has never backed down on tariffs. I mean, he has always.
What do you mean? We unrolled half of Liberation Day.
No,
tariffs.
I'm just saying he's never backed down on the strategy of using tariffs as a means of negotiation and leverage to get what he wants, and I don't expect him to do that now. He has other provisions. The IEEPA tariffs only represented, 60% of the overall tariffs that have been imposed by his administration. It's certainly a blow to his ability to do that, and maybe politically, but I mean, he's a guy that has consistently believed in tariffs from the very beginning, and I don't expect that to change anytime soon.
Yeah, we need like some sort of master, grandmaster, like the guy. Who's the guy who returned all the money from Madoff? That guy. We need him. Figure this out.
Yeah. Right.
Beautiful mind kind of thing?
No, yeah. I mean, they managed somehow to get everybody their money back there, but it took, a long time. This is going to play out in the courts for years, one would anticipate.
Again, $133 billion at stake here.
Yes.
What's been collected from IEEPA. Let's talk more about the market impact. Charlie Babrinskoy, Ariel Investments Vice Chairman, joins us. Charlie, overall markets holding in relatively well. We're seeing some relief for the retailers that have paid a lot of these tariffs. What's your reaction to how impactful this is?
Unabashed enthusiasm. I mean, this is a very positive development for the market. Now, the reason the market's not going up more is because the market thought this was by far the most likely outcome. But there's almost nothing that all economists agree on. And this would be the topic that almost all economists, conservative or liberal, agree on. Tariffs are not good for the country that imposes them, for the countries that have to pay them. They are inflationary. They reduce productivity. They reduce countries focusing where they have competitive advantages. Just to size this, our economy is about $30 trillion. $300 billion, which is the incremental tariffs that we got, is about 1%. We're running about 1% hot in terms of inflation. And there puts and calls and tug of war on what's causing that. But inflation has been part of the reason, has come from tariffs. It's the reason why inflation has stayed as high as it has. If you look at companies, they were very slow to impose higher prices, but they started to as the year went on. And now they're going to be in a position where maybe prices will be a little sticky, but they certainly won't go up as much as they otherwise would have. So this is a big positive, mostly for the real economy, for companies that make things, not services, not technology. This is going to be very good for the Mattels of the world, for the people that make car parts and housing products. This is a very positive thing that I think, frankly, there's not much controversy about.
Yeah, unless, of course, the president and his advisors figure out a different avenue in which, under which to impose those tariffs, Charles. I mean, as Sarah's pointed out, it's a significant sum, but of the tariffs that have been applied, it's not all under IEEPA, and one would expect that they're going to figure out plenty of ways, and have had months to consider it, of making those tariffs stick in another fashion.
Fair, but the market likes balance of power. The market doesn't like an autocratic president. I happen to be a Republican. But even I don't like an autocratic president. And so the market, directionally, this takes us back to what the Constitution does talk about, which is that taxes reside in Congress. They have to be approved by the president, but that's where they're supposed to emanate. And this was clearly a tax. And so we are now moving in a direction. Again, the market thought this was going to happen, so you're not going to see a massive positive reaction today. But the other way, if the Supreme Court had ruled in favor of these tariffs, we would have had a bloody day today.
You think? I don't know. It feels like it was sort of priced in. That this is the way the prediction.
Sorry, this outcome was priced in, which is why we're not getting much of a move. If they had upheld these tariffs and said that Trump could impose whatever he wanted under this legislation,
that would have been a surprise?
Yeah, we would have had a bloody, bloody day.
All right, so this doesn't really change your view then, because you clearly were in the camp that believed that the court would rule the way it did, correct?
That's right.
And your view is
but
what,
I think
Charlie,
it's still
in
positive.
terms of, yeah, overall, let's just sort of talk broadly speaking here. With this ruling now having passed, what's your overall view of where we stand right now in the S&P and the NASDAQ and everything else?
Yeah, so this, the same place I was a year ago, and that is that you've got to talk about different parts of the market, that the hard asset parts of the market, the technology world talks about software and hardware. You can do the same thing for the overall economy. Hard asset companies, housing companies, auto companies, oil and gas, consumer products, those areas never got to the 28, 29 times earnings that the S&P did. And so the technology part of the world, the soft part of the world got very expensive, and the value part of the world, the hard asset part of the world, got very cheap. And we've had a big rally in our part of the world that we live in the value world over the last year, but there's still more to go. My portfolio is trading about 14 times earnings, still very reasonable. The technology world is still not attractive in the high 20s.
Interesting. So I assume your portfolio doesn't include the likes of a Caterpillar or a Walmart, both of which are trading at 45 times earnings or something along those lines, despite they might once been viewed, I would assume, as being part of what you were just describing.
You are correct. Yes, there are names in the old economy hard asset world that are too expensive. I don't own any of those. You're right. Walmart's price is mind-boggling to me. But there are lots and lots of good value names. Just look at housing supply. Look at construction products. Look at oil and gas, still trading for less than 13 times earnings. This, by the way, was a very good day for the oil and gas industry. So that part of the market is still reasonably priced.
Charlie, just to circle back to tariffs and the court decision, I wonder, is it too much to hope that having IEEPA ruled on now, there's some incremental incentive to hire or invest, that there's marginally less trade uncertainty than before?
Yeah, thanks. I think that's right. I think we're going to see really good margins here, margin improvement. So I think prices will be sticky on the way down, but this is a significant cost that our portfolio companies were talking about how they were having to include it in their income products. And now that's not going to happen going forward. So at least we won't have growth in expenses. I think we're going to get margin improvement in a lot of the affected companies here.
All right, Charlie, thank you. Charlie Bobrinskoy from Ariel, First Reaction on the markets. Guys, I just want to raise something else, another issue to watch here, which is there a role for Congress? I'm looking at some of the statements coming in from different lawmakers. Senator Bernie Moreno, big Trump fan. He's the senior senator from Ohio. Part of his statement says this betrayal must be reversed and Republicans must get to work on a reconciliation bill to codify the tariffs that have made our country the hottest country on earth.
Thanks.
While he still has the slim majority here in the House of Representatives and the Senate, I do wonder, I think it'll be worth watching Congress to see if he can use Congress, if that's the argument of the court, that the Congress has the power to tax and tariff, if Congress can step in to help him. I'm not sure.
It is poetic that only now would Congress actually say, oh, yeah, we have a role in this.
Exactly. They were on the sidelines for most of this, and I'm not sure it's actually, I don't know if it's one of those issues where all Republicans do agree with. Typically, Republicans have, in the past, the old Republican Party hated tariffs. They were free traders.
And the margin's, what, one seat at this point?
Yeah, it's pretty slim.
Somewhere in there. See if somebody.
Just something to watch.
Yeah, it is. Very interesting. Let's watch the impact on autos as well as they move on some of this decision. Phil LeBeau's got that. Hey, Phil.
I want to show you three segments of the autos and the auto suppliers that we want to look at. Let's first off look at the domestic automakers. And by this, we're talking about GM, Ford, Stellantis. We'll put Tesla in there as well, although the tariff implications for Tesla far different than what they are for the quote unquote the big three. And the reason that these stocks, they moved initially a lot more, they've kind of regulated and pulled back a little bit. Couple of things to keep in mind. First of all, there has been a tariff headwind. As we've reported their quarterly results, they have said, look, it's maybe $500 million or $1 billion or $2 billion is what the tariff headwind will be. Still unclear how much of that will go away because of this decision. I should point out that AlixPartners has run the numbers in terms of what the tariff implications are expected to be in 2026. And for domestic auto production, it's going to be about $15 billion net cost. That's after all of the rebates for goods that are U.S. content, et cetera. It's about $15 billion, another $15 billion for those vehicles built outside the United States brought into the U.S. We know that some of that is offset because of those offsets that we mentioned, but also the companies will have to eat it, as well as some is passed along to the consumer. Bottom line is this. I think what Charlie Barbinsko has just said regarding margins, I think that's true. You're going to see the auto sector being one area where that's a definite impact. In terms of the foreign automakers, talking about Toyota, Nissan, Honda, Mercedes-Benz, BMW, the implication is a little less clear because, remember, there have been some final trade agreements, as Sarah pointed out, that have been worked out with these countries. Are those still in effect? Are they not unchanged? If that's the case, this decision doesn't have a whole lot of implication there. And then finally, take a look at the auto parts suppliers. Now, these guys are probably the ones who are going to see the biggest impact here. But the movement in the stocks is not a lot because they're waiting to find out what happens with USMCA. That is far more important to the auto parts suppliers than it is to anybody else. And we know that agreement comes up later this year. How is that worked out? And what is the implication there in terms of production in Canada and in Mexico? So that's a snapshot of where we are in terms of what this decision means for the auto industry.
Phil, thank you. Phil LeBeau, of course, as we take a look at some of the auto suppliers there. Let's bring in Apollo's chief economist, Torsten Slok, who joins us here at Post 9. All right, let's just start off on, obviously, the news of the day. What are your thoughts about this ruling from the Supreme Court?
Key implication is that the inflation forecast is now going to go down, and this makes it a lot easier for the Fed to cut rates. It actually has made Kevin Warren's job a lot easier than if you had the problems of inflation still being a headwind over the next several quarters. And when inflation is coming down, that, of course, also means that, therefore, it becomes easier for the committee to say, well, if the rest of the economy, in particular the labor market, is still doing well, and if inflation is lower, that means that the Fed implications and the rates implications are very clear.
How much inflationary impact did you attribute to tariffs so we can try and understand perhaps what it may come down if, in fact, it does?
Yeah, we estimate that roughly 0.5 percentage points of the rise that we got in inflation last year came because of tariffs. And if we now have that roughly 2/3 of tariffs that have been collected came under IEEPA, that means that in very round numbers, around 0.3% should be the decline in inflation over the next several quarters.
That's not in the data. I mean, it's not in the PCA data today that we got. If you look at, okay, let's look at all the tariffs. I know. Look, okay, clothing and footwear, negative 2.4% price impact. Durable goods, negative 1%. Furnishings and durable, these are all the tariff items. They were negative, down 0.2%. If you look at where the 3% inflation number came from, which was hot, healthcare, recreational services, financial services, other services, housing, which is services, it's not in the goods.
Yeah, so this is just 1 month number, but if you look at it for last year, those components saw much higher inflation rates. But you're right, going forward, the service sector should also begin to see some easing of the inflation pressure. So the topic that we have talked about now for a while, 3.0% today is indeed quite worrying on its own, but we should still expect now that inflation is going to be lower.
But why?
Because of tariffs coming down.
If tariffs are not contributing to inflation now,
but they did contribute last year, so the year-over-year window will mean that as you go through this year, will mean that you will begin to see a roll-off.
We were already lapping those and seeing negative numbers now.
To our earlier point, not every tariff has been implemented into price.
True. Right? So there were certainly also estimates saying that there was something in the pipeline, but now that this is not going to be implemented, that of course also will be arguing for why inflation should be lower.
You're willing to go that far even with oil at a 7-month high?
Well, of course, there's a lot of other components going on at the moment, but it's clear, of course, the geopolitical risk, in particular oil prices, which didn't do much over the last several months and geopolitical episodes, if that were now to become a bigger factor, certainly that would, at least on the food and energy part, be lifting some more upward pressure on inflation.
But the administration said they have a plan B, and they're going to just do all these tariffs under different authorities.
But that, of course, will now come with much more investigations, much more time lag, and therefore there will be much more delayed relative to how it's been used and deployed over the last 12 months.
So you do actually expect an economic impact out of it?
I absolutely expect that inflation will be lower as a result of this.
And you said makes Kevin Warsh's job easier. So you believe what? When do we start to see the impact in terms of lower rates from the Fed?
Well, the market has been expecting 3 cuts this year. The Fed themselves are only expecting 1 cut. So I do think that when we get to the middle of this year, we should begin to see, at least on the inflation front, that it becomes a lot easier for the rest of the committee to say, well, the inflation problem we worried about for so long is no longer as big as the worries we had just even at the last meeting.
What about the job market worries?
Well, the key word in the job market has been that labor supply has been declining a lot. So in 2022, 23, and 24, net immigration into the U.S. was about 3 million people. And the CBO estimates that so far the last 2 years, meaning 2025 and 26, is dropped to only 500,000. So that means that the main reason why the labor market has been slowing is not because of weaker labor demand. Yeah. It really has everything to do with weaker labor supply.
Right, and which there was a good study we highlighted yesterday out of San Francisco Fed showing it was basically 1 for 1, immigration to job growth. So
and that's extremely important because that tells you GDP has been relatively strong. GDP today was 1.4, but if you add the shutdown back, you get to 2.4. That's higher than the CBO's 2.0 estimate of potential growth. And if you look at the Atlanta Fed GDP now, also 3. So there is no slowdown when it comes to income and GDP. The slowdown in the labor market is almost entirely driven by labor supply and not so much by slowdown in the GDP and in the broader economy.
Is the break even negative now?
Well, the Dallas Fed says that the break-even is about 30,000, but you can certainly come to, if you in particular have your migration being very weak in certain months, that it could be closer to 0, and in some months it might even be negative, mainly because of the demographics that are weighing from an aging population on holding job growth down. Right. But you're right, Carl, this becomes very important because the latest job numbers were actually not bad at all, in particular compared with estimates of break-even of around 30,000 to 50,000.
Right. Do you think it's possible we don't add jobs this year?
Well, the discussion that we've had about we didn't add any jobs last year, that's not because the economy was bad. That's just because immigration was weak.
Yeah, I mean, minimal job growth last year. I'm wondering, could it be worse this year?
No, you're right. And therefore, if we have the same immigration policy, which we have all reasons to believe, then we should absolutely believe also that job growth is also, from that perspective, going to be low. But it is simply not so much because of the economy slowing down. It is much more driven by the fact that we have much fewer immigrants coming in.
All right. Torsten, you want to stay there? I think we want to get back to Eamon Javers in D.C. Eamon.
Yeah, David, our Emily Wilkins has got a statement now from Senator Chuck Schumer's office reacting to this. Of course, the Democratic leader in the Senate saying this is a win for the wallets of every American consumer. Trump's chaotic and illegal tariff tax made life more expensive and our economy more unstable. Families paid more, small businesses and farmers got squeezed, markets swung wildly. We've said from day one, a president cannot ignore Congress and unilaterally slap tariffs on Americans. That overreach failed. One political note here to weigh in on this, guys, as you look at this 6-3 decision, striking to me that 2 of the justices that President Trump appointed to the Supreme Court sided against him. Gorsuch and Barrett both sided with the majority here on that 6 to strike down the president's dearest domestic and international policy objectives. So that is a striking thing. And one of the reasons why presidents are often frustrated with Supreme Court justices is they have lifetime tenures and they can do what they want once they're placed on the court. One other thing I think we should really focus on, which we haven't had a chance to do yet this hour, is China. This ruling, we're looking through all the tariffs that the president imposed so far this year on China. This ruling will strike down all of them. You remember there was this tariff truce between the United States and China, President Trump and Xi Jinping back in October, where they lowered tariff rates. But all of the tariffs now that the president has imposed on tariffs in this second term, that the president has imposed on China in this second term, have been under this IEEPA authority. So all of those tariffs are now struck down. So in terms of the trade between the 2 biggest economies on planet Earth, China and the United States, this will have an enormous effect on that unless the White House can come up with some other authorities relatively quickly to impose tariffs on trade with China. Right now, there's going to be an open door in terms of tariffs between China and the United States, and that is the absolute cornerstone of the president's trade agenda, guys. So I thought it's worth focusing on.
On a day where we get his travel dates to China, Eamon. Right. He'll be there March 31st to April 2nd. Meantime, some items on the wire from the likes of, say, the British Chamber of Commerce trade arm, which argues that this is actually going to introduce more trade uncertainty.
Absolutely it will, because one of the things you have to bear in mind is a lot of these trade agreements with other countries where the president used that leverage of tariffs to get them to the table in the first place, and they announced a deal, a lot of those have not actually been ratified by the parliaments back at home, so they don't have force of law right now. So if you're a foreign country that was forced to the table by this threat of tariffs and you haven't ratified your agreement yet, you might look at this decision and say, well, wait a second. There's no reason for us to ratify right now because the president can't hold this over our heads anymore. That's the leverage that the president was so frustrated about going away. It has gone away, and now we'll watch as other countries that have not formally signed or finalized those trade agreements, and there's a lot of them. I don't have the exact tally right in front of me. A lot of them have not been ratified yet by home country parliaments. I would imagine those countries will start to slowly walk backwards away from those deals.
South Korea is a big one.
South Korea, of course, comes to mind, given the president has already called them out for their failure to ratify and how quick or slowly things have been moving.
Well, they knew the longer they took, the more likely this decision could help.
Yeah, a lot of people were treading water waiting for this.
Although I asked Jamil Jaffer about this, and he said that actually he didn't expect much. We were just talking to him, expect much change because these are. Yes, they were negotiated around the threat of IEEPA, but ultimately they were deals negotiated. So there's no reason ultimately that these foreign governments should go back on them because the White House Commerce Secretary, Treasury Secretary, they negotiated these separately, these deals.
Yeah. But the terms of the deal have changed, right? I mean, the terms of the political reality have changed. And you can imagine the temptation anyway in foreign capitals to look at this and suddenly discover a codicil or a paragraph or a subsection that you really object to. And, we're just not going to be able to sign this thing after all.
Yeah, interesting. Also, just watching some in terms of the market reaction, guys, the dollar index actually initially kind of jumped on it and now has turned lower. And maybe Torsten's Lock, it's because of what you say, which is, well, it'll be easier to get easier policy now if you don't have to worry about tariffs.
Because the expectation is if rates are going to come down, then there's less money, of course, coming into dollars. But at the same time, another key issue here is also that if the government needs to go out and find 133 billion, if we now see more treasury issuance, the curve could potentially also see some reaction. But that's why what's coming next in terms of the reimbursements will become very important.
But they want to use
you mean steepening?
Absolutely, because then they need to go out and find 133 billion on the curve, and if that happens further out, of course, then we should be a steeper curve.
They'll just use another section from another tariff bill.
But that will take some time, obviously, to begin to implement.
Sure, but I mean, ultimately, the bond market hasn't really, we were watching the bond market carefully. We haven't really seen a big sign that there's all of a sudden worry about the debt or anything like that.
No, because on the one hand, inflation is going to be lower, which argues for lower rates. But on the other hand, the economy is now going to be hotter. And the economy is already hot because of the One Big Beautiful Bill. We have AI spending, and those tailwinds will continue to accelerate over the next several quarters.
While we're on that, I've seen conflicting numbers from IRS and B of A on where refunds are tracking. How are we up year on year, and do we think that money's going to get spent on utility bills or saved with the saving rate as low as it is today?
Well, the key issue is that the refunds will, broadly speaking, be roughly $1,000 bigger when we come to tax filing season. Normally, households get $3,000 in tax filing seasons, meaning in March and April. This time around, they will likely get around $4,000. That's a very, very meaningful increase in consumer spending because there's about 120 million households in the U.S. If you give them $1,000 extra more, that is a very meaningful boost in March, April, and May to consumer spending over the coming months. So on the back of this decision, it really is moving more towards a Goldilocks scenario where growth is going to get better and at the same time, inflation is going to be lower.
I still don't understand why you think services inflation comes down as a result of this.
Well, I've been arguing with you for a long time.
I know, but you're expecting all this great growth and GDP growth.
But I think last year...
That's what's fueling services inflation.
No, you're right. But last year, most of the growth in inflation came from goods. Now that's been coming down a bit, but service inflation, it begins to get hotter. And that's because the labor market is hotter because immigration is now running much lower and therefore creating more wage inflation. So the conclusion is, yes, you're right in total. There's a lot of moving parts, goods and services for inflation, but the net effect of this must be in the Fed's forecast that inflation is going to be lower.
What about productivity improvements, given everything we're talking about in AI that's still mostly on the come, but could start to hit this year?
Yeah, that's true. We haven't seen that yet. As Jay Powell has said repeatedly, we're not seeing it in inflation, we're not seeing it in productivity, we're not seeing it in unemployment. So yes, it is likely that we'll begin to see some of that, but those, of course, are very uncertain certain factors at this point. But those are also key issues for the inflation forecast if they were to play out.
Not to mention for the job forecast over time as well, as we've discussed many times, in terms of the dislocation that may come from AI.
What about consumer spending? Do you think there will actually be a change in consumer spending and confidence as a result of this decision?
Well, if the importers now go out and say, well, suddenly we don't have to pay tariffs at these magnitudes, that should imply that prices of goods that are imported should begin to come down. And that should ultimately mean that retailers should see a boost because demand should be going up for, of course, a lot of things when it comes to consumer goods. So in the goods world, this is absolutely boosting, of course, sales, and at the same time is lowering prices. So this is truly Goldilocks for the goods sector.
I wonder, I mean, it's funny, we have some names up here, including consumer electronics. Do you think memory prices are going to be so powerful that they'll be a deterrent on spending?
Well, at this point, of course, that also depends on the AI outlook and of what's happening, of course, on the AI and data center spending front. But you're right, there's a lot of different things when it comes to these tariffs. What the reaction will be in terms of demand will be very critical. But that's what we need to watch, of course, over the next several months.
Right, so you do see real wages growing for the year? Because they've compressed a little bit, yes?
Yeah, they have, but average hourly earnings are still very forecasted by the consensus to be very elevated because of, as Sarah is mentioning, service sector inflation is still running relatively hot, and it still takes time for housing is going to come down, but the other components of service sector inflation are still going to be relatively elevated. This is all about goods, and goods makes up roughly a third of the CPI basket, so that's why goods inflation is going to see some downward pressure over the coming quarters.
Finally, I didn't have time to look at the composition of consumption today. But last quarter, healthcare was a huge driver of consumer spend. Was it the same today?
Yeah, so, well, and that was also the case today. That's why the services part, to Sarah's point, is indeed where a lot of the overheating is taking place. And that's why the labor market, which feeds so importantly into the service sector, continues to be so critical.
Torsten, thanks for being here, for hanging around as well.
Thank you.
Important day as well. Torsten Slug from Apollo.
Apple has certainly been a big focus throughout the tariff conversation. Let's get to Steve Kovach with a look at the impact of this decision on Apple, Steve, which Apple had a lot of tariff relief, didn't it?
Yeah, definitely. And I'll just go back to what Eamon was telling you guys just a few minutes ago. It was all tied to China. Now that the IEEPA tariffs were only the China's tariffs, that really impacts Apple. Remember, guys, last year we saw Apple sort of shift its entire supply chain, moving stuff to India, to Vietnam, in order to get around the worst of these tariffs. They kind of painted this picture of everything we make in Vietnam for MacBooks and Apple Watches and other accessories will eventually go over to the United States. And as far as the iPhone, they're shifting as much production to India as they could. So this actually gives them a little more breathing room to keep that production in China, which is where the bulk of their production actually happens, and to start selling some of those products back into the United States without this hefty tariff rate. But let's also talk about how much Apple has spent so far. $3.3 billion in tariff costs so far for Apple since Liberation Day of last year. The biggest bill, of course, was the December quarter, where it was $1.4 billion in tariff costs. Now, I asked Apple if they're considering going through that refund process that we've been talking about so much. No comment there, but you also got to take into account the political environment here and just the behavior of Tim Cook and his team around the president and making sure to keep him happy in order to keep the worst of the tariffs off. So, of course, that all culminated last August at that big moment with the trophy ceremony in the Oval Office. So perhaps they're going to be okay just eating these costs and not going through this refund scheme. Sarah, I'll toss things back over to you.
Okay, Steve Kovach. Steve, thank you. We are in breaking news here as the start of Money Movers begins. I'm Sarah Eisen here with Carl Quintanilla. Just got that Supreme Court ruling in the last hour, 6-3, shooting down the president's use of IEEPA tariffs, reciprocal tariffs, which is about 60% of the tariffs that he has imposed on our trading partners.
We'll talk to former CEA Chair Jared Bernstein about the decision and all the implications for the global economy.
We will also later talk about the market reaction. Investors continuing to factor rising geopolitical risks as Iran tensions simmer. Former Defense Secretary Mark Esper will be joining us. First up, though, in the markets, looks like the market is reacting positively to this decision. S&P 500 is up 0.6%. Communication services and consumer discretionary in the lead. Biggest reaction we've seen has been in the retailers, those that have paid a lot of the tariffs or absorbed a lot of the tariffs. Tapestry, Amazon, Deckers Outdoor. These are some of the winners today. Lululemon in the session. As far as the bond market, which we're watching carefully, we're seeing a little bit higher yield. So one of the questions there, Carl, is would we see a big sell-off in bonds on concerns about the fact that these tariffs would go away and they were plugging an important hole in the debt? A little bit firmer yields, but nothing dramatic.
Right. Let's get right to that Supreme Court decision, which we got about an hour ago. Our Eamon Javers has been going through the opinion and some of the dissents all morning. Hey, Eamon.
Yeah, good morning again to you, Carl. A sweeping 6-3 decision from the Supreme Court of the United States shutting down the president's biggest economic policy of his second term, his power to impose tariffs under the International Emergency Economic Powers Act. The Supreme Court ruling that, in fact, the act did not, under the Constitution, give the president the authority to conduct those tariffs, that the taxing authority, the president said, was in that law, was not, in fact, there. Here's a key sentence from the Supreme Court ruling. They say the government reads that IEEPA, the law in question here, to give the president power to unilaterally impose unbounded tariffs and change them at will. That view would represent a transformative expansion of the president's authority over tariff policy. It is also telling that in IEEPA's half-century of existence, no president has invoked the statute to impose any tariffs, let alone tariffs of this magnitude and scope. That lack of historical precedent, coupled with the breadth of authority that the president now claims, suggests that tariffs extend beyond the president's legitimate reach, according to the Supreme Court. Now, we're waiting for a reaction, presumably on Truth Social, from the President of the United States. He's just gotten done with a meeting behind closed doors over at the White House, so you can imagine that the staff now is meeting with him to confirm what it is that he wants to say about this. The president has said that this would be the most important ruling the Supreme Court would ever make, let alone in terms of his second term in office. But a sweeping rebuke now by the Supreme Court of the president's signature economic policy, a thing that the president believes at his core he has the power to do. The Supreme Court now saying he doesn't have the power to do after all, guys.
And what do we expect, Eamon, the White House to have a plan B, as they've told us in numerous interviews, in order to impose and collect tariffs? I guess the question is how long, and can they do it in the same magnitude?
Yeah, I mean, one of the questions is how much flexibility will they have to do this? A lot of the mechanisms that are under the law, you look through the list, Section 338, Section 232, Section 301, all these other authorities to impose tariffs under the law require some sort of process. You have to conduct an investigation. The investigation has to issue a report. That has to be over 90 days or 180 days, et cetera. All of that means that the president doesn't have the light switch authority to turn tariffs on and off the way he has been doing over the past year. That limits his flexibility. So the White House has said they will find other ways to impose tariffs because the president has this as a core economic belief. But those other ways won't have the kind of flexibility the president has believed he enjoyed over the course of the past year. And so that's going to put the White House in a box. How quickly can they do this? How fast can those tariffs have legal effect? And what is the gap between now and then in terms of billions and billions of dollars of trade? All those questions are unanswered as we sit here right now. And I've been texting with White House Press Secretary Caroline Leavitt to see if we can get a sense of whether they're going to announce today their alternative measures. Don't have any indication from the White House yet that they will put that out today, but we can expect that it will come very, very fast because this has lowered the tariff gate that the president put up around the country in 2025.
Right. As we said earlier, a few days before the State of the Union, and we'll see what kind of rewrites are in place this morning. Finally, Eamon, on Kavanaugh's dissent, a lot of discussion around his argument on sort of the as he calls them, serious practical consequences in the near term.
Yeah.
He says this court decision does not address the issue of refunds, and in his words, that process is likely to be a mess.
Yeah, and that was something that the court heard in the oral arguments last fall, that this would be a messy process to give these refunds. Remember, $133+ billion at stake. That's what the U.S. government has collected under these IEEPA tariffs over the past year plus. And that's what presumably the government is on the hook for now, to redistribute back to any companies that paid those tariffs at the point of import to Customs and Border Protection. So if you run a company today that paid a check to the U.S. government to import something, you're going to be looking for your refund. And how that happens and who gets that money is going to be a massive, massive logistical question. Kavanaugh in his dissent also raising the concern that the president's ability to force other countries to the table in terms of trade negotiations, that's also diminished by this. Kavanaugh saying the court's decision could generate uncertainty regarding various trade agreements. That process, too, could be difficult. Uncertainty in that case, Carl, might be something of an understatement.
Flexport CEO actually posting on X that they have a tariff refund calculator because Flexport is obviously a shipping supply. A supply chain kind of company where they can track where those duties are paid and by whom. So they're putting that out there. Thank you,
I bet
Eamon.
every company that wrote a check has a calculator also, right?
For sure. Eamon Javers. For more on the decision, let's bring in Michael McConnell, Stanford law professor and former circuit judge on the U.S. Court of Appeals for the 10th Circuit. Michael's also a counsel of record for one of the 3 cases that was consolidated into this Supreme Court case. So just to be clear, Michael, you were representing the small businesses who were fighting this?
That's right. I'm along with the Liberty Justice Center, which brought the case, and another law firm.
Did anything surprise you about the ruling?
Well, I was actually hoping for a unanimous ruling, but they don't come often in the Supreme Court. The basic ruling of the court was pretty much exactly what we argued, that the IEEPA, International Economic Emergency Powers Act, does not mention tariffs. It uses the word regulation, but the term regulation has never been used to include the power to impose taxes. And so this decision was largely expected.
In the dissent, Justice Kavanaugh says when IEEPA was enacted in 1977, Congress and the public clearly would have understood that the phrase regulate importation encompassed tariffs.
Well, that seems rather odd because that language came from a prior statute, which had been in existence since World War I and had been used exactly once to impose tariffs. That was by President Nixon. And Congress, in the legislative history of IEEPA, criticized that action as being executive overreach and amended the statute in order to preclude that from happening again.
So now how do you go about collecting the refunds? Because that is very much a question mark.
So I'm a constitutional law professor. I'm not a trade lawyer.
How do your
I don't
clients
actually
do that?
know very much about the process for refunds. But certainly the statute provides for refunds, and I expect many companies will be filing claims.
When we think about the legacy of this decision, Michael, years from now, will we talk about it in the scope of executive power overall?
Absolutely. The opinion in the court, counting all the concurrences and dissents and so forth, is massive. This is what from my printer this morning. But most of the ink in these pages is not really about tariffs specifically. It is about how to draw the line between presidential authority and congressional authority. And I think this is going to be a landmark decision. I suspect this will be taught in every constitutional law class for decades.
And the lessons from it are what?
So the lessons from it are that the president, when the president does not have explicit constitutional authority but has to rely upon delegations from Congress, that those delegations have to be reasonably precise, that the executive is not entitled to read into the vague language of old statutes sweeping powers that had never been understood to be there before.
Do you think it lights a fire under Congress to assert its own authority as given by the Constitution?
I certainly hope that that is true. The situation in Congress is political. It's not a matter of constitutional lack of authority. It's a matter of that the people in our wisdom have elected a Congress that's so narrowly divided that it's very difficult to get things through.
So can you just explain for us, so what is, I mean, if the Supreme Court has ruled that tariffs should not be included in IEEPA, what is IEEPA? What is the purpose of it? How should we understand it in the Constitution?
Well, IEEPA is a very important statute, and it's the basis for economic sanctions in the case of international conflicts. So it's actually been asserted many times by many presidents, just not to impose taxes on American companies.
Right, because that ultimately would require Congress.
That's right. The taxing power is as clear a congressional power as any. And IEEPA gives the president foreign affairs powers to impose sanctions on foreign countries and foreign traders. It's not a taxing power to impose taxes on the American people.
There's been some discussion about where the administration might turn next. A lot of chatter today about Section 122. I don't know how much in the weeds you can get on trade policy and statute, but some of these are a lot more restrictive and non-discriminatory, meaning he would not be able to apply more pressure on, say, one trade partner than another.
Yes, so there are a number of statutes that do give the president limited tariff authority, but each one of them is defined by its purposes, by its scope. The procedures are often time-consuming, and none of them would allow the kind of sweeping worldwide tariffs, the sort of blunderbuss tariffs that we've seen here. Remember that the so-called Liberation Day tariffs were imposed on every country in the world, which means that we have tariffs of 10% on countries with whom we were experiencing actually a trade surplus, where there's no evidence of a national security issue, where there's no evidence of unfair trade practices on the other side, simply across the board. And there is no tariff statute that would allow the president to exercise that kind of power.
So just to be clear, I mean, for those that are wondering, so does the president have power to impose a trade embargo, you know, in the matter of international security, that sort of thing? Does this put a limit on all of that?
No, actually, the statute does permit trade embargoes, but note that the underlying economics and political circumstances for embargoes are entirely different for taxes. Embargoes basically hurt everyone. They don't serve as a benefit to the executive. This is a way for the executive to raise money without having to go to Congress. Any executive would want to be able to do that. Trade embargoes are a costly, difficult, often unpopular policy.
Got it. Yeah, I mean, the revenue raise is key. Michael, thank you so much for being with us so soon after this announcement. We really appreciate it.
I've enjoyed it. Thank you.
Thank you.
Let's get to some of the market reaction to this decision. Bring in Strategas Chief Market Strategist Chris Verone, who's been listening in here on Post 9.
Yeah.
It's good to have you, Chris.
Great to be here, Carl.
We were bracing for big moves, and we've got some in retail and shippers. But how do you gauge the reaction?
Yeah, I think there's some very specific stocks where they're certainly moving. But on balance, this was the expected outcome. And how do markets respond to expected outcomes? They tend to yawn through it. What I think is going to be more important here over the next 4, 6, 8, 12 weeks is how does discretionary on balance start to respond? Because remember, we kind of went into 2026 with this well-formed narrative of why discretionary should be really good here because of tax refunds and stimulus and the potential of what we saw today with tariffs. So can discretionary respond to that? I think over the next number of months is going to be a really important question as to kind of how the market perceives the economy moving forward. I always get a little bit skeptical when there's a fully formed narrative before the stocks actually move. Typically in this business, it's the other way around. The stocks move and then the narrative shows up. So I'm a little bit struck that maybe the response of discretionary is a bit more modest than you might expect here.
I mean, I know it's not necessarily discretionary, but how does Walmart fit? Because valuation's high, the guidance was muted, there's a downgrade today, despite all of the enthusiasm about its e-commerce efforts.
Well, I mean, it's been the leader along with Costco and the staples, but when you look at where these things trade, I think Costco's in the 50x times next year's EPS. I mean, these don't trade like consumer staples from a valuation perspective here. I do think when you look at discretionary more broadly, maybe the most generous thing we can say is it's a very, very split group here. And what we've seen kind of in our careers and doing this is when you get events like this, they tend to reinforce what was already in place. So look to what was already improving within discretionary. The housing stocks have been getting better for 2, 3, 4 months here. And, they're strong again today. The housing retailers, look at Lowe's or Home Depot, I think speak to that. And then I think giving the housing call maybe some credibility is all the building product stocks are breaking out here. Yeah. The Carriers and the Trains and the Masco. So something's coming together in housing, whether that has anything to do with tariffs or stimulus is unknown to me, but the 2-year yield is hovering at 3.45. I mean, we're in a pretty accommodative environment on the yield front.
I was going to say, I mean, strategist after strategist, investor after investor we've talked to, everyone said like tariffs and trade policy is a little bit of a headwind, but no, it has not held back any bullish forecasts. Everyone's been super bullish. Everyone still expected record profit margins to happen this year and really strong economic growth. And that was assuming tariffs stay. So does this really change anything?
Well, that's where we got to ask this question. Does the market actually validate this? And, we're price first, narrative second. And you look at discretionary versus staples as an example. Given these narratives of why discretionary should be so good this year, we're a little bit struck that it's underperformed staples by a pretty healthy margin here. Now, when Torsten was on earlier, I did think he brought up a very good point about this idea. Does this give the committee cover in the new Warshvet to actually be easier than they otherwise would be? If this was the main impediment to getting easier on policy. So watch the 2-year yield here. You do have a little bit of a steepener today. Let's see if that can persist, because there are some flattening vibes going on around the world here. We've seen the Japanese curve flatten. We've seen the German curve flatten. I don't think we want to get into that flatter environment moving
I think,
forward.
were we 60 basis points or so?
Yeah,
on
2s and 10s,
yeah.
kind of in the low 60s. 2s 30s have flattened pretty severely. Japanese 2s 30s have really collapsed here. I mean, the Japanese 40-year yield is down 70 bips over the last 2 weeks here. So there's been some flattening on the long end globally. Does that begin to bleed into the U.S.? I do think it's a pretty big question.
The other thing that's been raised today is global equity flows and the U.S.'s share of it. For every $100 in 26 so far, U.S. is getting maybe a quarter of it. You got to go back 6 years maybe to get it that low. How does that reverse, if at all?
Carl, this business, as I think you know, is all about what's on the margin. And I think on the margin, if you look at, say, U.S. market cap as a share of global market cap, it's basically been declining for 18 months now. I mean, this didn't peak 4 weeks ago or 8 weeks ago. It peaked in second half 2024. And in the spirit of, when you get events like today, I think it reinforces what was already in play. And I think what's been in play for 18 months is rest of world over U.S. in terms of equity leadership. And there's just more and more evidence of that. Almost every global market that we look at in our work has made a new high in February. You know what hasn't? S&P and triple Qs, right? So right there is telling you there's some change of character that I think speaks to, this longer term trend changing towards rest of world.
We're getting we're already getting all the retail analysts putting out reports about the biggest beneficiaries of this. Needham says that SHOO is the ticker. It's Steve Madden, SHOO, paid the most in tariffs. They would be the biggest beneficiary. I'm just getting another retail report here, equity research from Jefferies. Biggest tariff winners, Signet, Yeti, SN, Shark Ninja, Nike, and Birkenstock. In terms of just who, stands to high exposure, import exposure names, which this eases the cost pressures and clearly the margin drag that they've experienced.
We had baskets earlier that included Gap and Restoration Hardware, right?
It's basically anyone that sells domestically but produces abroad and faces higher cost because they've had to pay the tariffs.
Yeah, I would focus on those more housing-related names, whether it's Restoration or Williams-Sonoma, Lowe's or Home Depot, Wayfair. I mean, they've been improving in advance of this, which I think gives the moves today a little bit more credibility as opposed to some of the reactionary stuff you're seeing in like the discount retailers. So there seems to be a pretty big difference of message there between the two. I would stick with the housing stuff. This has been getting better. I think it continues to get better.
There are some shows you're lucky to be part of, and we're glad you had you here today.
Great to be here.
Yeah, it was a good one. Chris, thanks. Chris Verone.
Always. Love a breaking news show. International markets also reacting to the tariff decision. Seema Modi has been watching that for us. Seema.
Hey, Sarah, the immediate reaction of this ruling is that it's good news for international markets, good for global growth. As you know, tariffs have been a huge tax on the world over the past 12 months. And now the expectation is that the administration will have to be more strategic in nature in how it uses tariffs as an effective tool in negotiating deals with countries. The auto sector in Germany, right, has been hit hard by tariffs. BMW, a big exporter, as well as Mercedes. And they've been dealing with this ongoing tariff headwind. So you'll see that Germany's ETF is outperforming this morning. And same for South Korea with Kia and Hyundai. So far, these countries have been the ones that have been inking deals with the U.S. and their stock markets are higher, and calling out India as well. Now, the ruling does open up a number of questions, the topic of potential refunds. So we'll want to see how these countries strategically plan, if any, legal steps to request And reimbursements, that's going to be an open-ended issue. However, some of the strategists we spoke to this morning said that the worry is that if they do request refunds, that could potentially invite retaliation from Washington. So at this point, the expectation is that these countries are going to tread very carefully and weigh their options as they learn more about this ruling, guys.
Okay, Seema Modi. You know, it's a debate now, Carl, whether this is ultimately positive news if American companies and importers don't have to pay as much, or if it's negative news. I mean, there are potential negatives here as well. Trade uncertainty, because we know the administration wants to impose new tariffs using different authorities. On that, the debt, of course, questions, and whether that was plugging a key hole in the deficit. So, yes, maybe a sigh of relief for some of the retailers and overall market, and as Seema mentioned, global stocks taking it well, because tariffs ultimately are usually negative for economic growth, but I think it presents a lot of big question marks and uncertainty.
You can even extend it further and say, if he is unable to honor some of these deals that have already been negotiated because he's only got Section 122 or whatever, what does that do to promises of investment? Do some of those commitments now get broken? What does that mean for capital coming into the country?
I mean, good luck to Japan or South Korea trying to go back on the trade negotiation. It's probably not a wise decision for them to make when it comes to relationship with the U.S., both from trade and geopolitical perspective. But again, it injects some uncertainty.
Yeah. We're joined this morning by one of the lead challengers in this SCOTUS case. With us this morning is Rick Woldenberg, CEO of the toy companies Learning Resources and Hand to Mind. We've spoken to him earlier in the prior weeks, going into this decision. Rick, it's good to have you back. Thanks for joining us.
Thanks for having me.
Where were you when you got the news?
I was talking to a colleague. We were having a one-on-one, so I was not expecting the ruling today, so it was a surprise.
And your reaction to it?
Well, obviously feeling validated and vindicated. We believed it was an unlawful tax. I believe the Supreme Court adopted the argument we made in our complaint in April. And, I'm excited about that. I'm also excited about the endorsement of rule of law being applied equally to everybody in this country. Quite an important thing. Our country is investable because of rule of law.
You'll acknowledge that going back and I guess we'll use the term fixing some of these policies and tariffs is going to require a lot of work and a lot of guessing.
I don't know. They're pretty good at taking the money from us. I think they just got to reverse the gears and send it back.
So you're not daunted by the backlog of court cases that are demanding refunds?
No, they're trying to perfect their right to collect the money because as entries are liquidated, you can, under some circumstances, be prevented from getting your money back. But actually, the CIT has spoken pretty clearly on that. I think everyone's going to get their money back.
I mean, the fact that you brought this case, you are the lead challenger, your name is on the case, and you've won the case. What does that do to your business? Does it change your trajectory?
I don't know. We didn't do this to make a profit. We're excited to stand on the right side of history here. I'm an ex-lawyer. Your last guest was one of my old law professors, former law professors, I should say. It's gratifying to be a part of American history and the development of the jurisprudence in this country. We felt like we were standing for something very important. James Madison designed our government, and we believed that we were standing up for his design. That's gratifying, honestly.
And just to be clear, I mean, you've talked about before, this was not political for you, right?
No, it's not. We don't.
This is Network 18, and you're watching CNBC TV 18. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV 18 and CNBCTV18.com.
As a sign of our commitment, we just this week opened an office in Bengaluru and hired Irina Ghosh, who has spent 3 decades building businesses in India as our managing director for Anthropic India. We've also announced partnerships with major Indian enterprises this week, including Infosys and others. On the opportunities, one dynamic that we have observed is that technology and practices pioneered in India have historically set a standard for the global South and have helped to diffuse technology and humanitarian benefits through the global South. We're therefore we have been partnering with for several months, nonprofits such as the X-Step Foundation, Pratham, and Central Square Foundation to use our models to advance digital infrastructure, education, agricultural efficiency, and health in the hopes of spreading AI's benefits across the global South, starting with India and diffusing out to the rest of the global South. We're also partnering with Karya and the Collective Intelligence Project to build evaluations and metrics of our model Claude's performance on India's many regional languages. On practical and locally relevant tasks, we'll benchmark like agriculture, legal tasks, and educational content. On the risks, India is the world's largest democracy and can be a partner and leader in addressing the global security and economic risks of the technology. We'd like to work with India on testing and evaluation of models for safety and security risks in the tradition that was started by many global and national AI security institutes that have been stood up around the world. Even more, we see a particularly strong opportunity to work with India on studying the economic questions and policymakers to adjust, to adapt to the economic impacts of AI. We believe that AI will greatly grow the economic pie, including in India and the global South, but that because
Hello and welcome to India Business Hour. I'm Archana Solanki. Here are the headlines we're tracking this evening. Trump's global tariffs have been struck down by the U.S. Supreme Court in a 6-3 majority. The court calls Trump's tariffs illegal. Supreme Court also adds that it does not address eligibility for tariff refunds. Stocks on Wall Street rebound. A Friday rally helped Sensex and Nifty end in the green for the week, but the IT sell-off continues. The Nifty IT index has lost 17% in the last 3 weeks. Crude oil prices remain in flux. U.S. military buildup near Iran continues to grow. President Trump says prospects for a deal with Iran will be clear within 10 to 15 days. Iran's foreign minister says the U.S. is risking a major crisis. Commerce Minister Piyush Goyal says first tranche of the India-US trade deal is likely to be operationalized by April. US Ambassador to India Sergio Gore says an executive order reducing tariffs on India to 18% includes a number of aspects and will happen soon. Officials from India and the US are in close touch over the purchase of oil from Venezuela, says US Ambassador. Adds US has seen India diversifying its crude imports and President Trump wants countries to stop purchasing Russian oil. India signs the Pax Silica Declaration in a significant move to strengthen technology partnership with the United States. Pax Silica is a US-led initiative aimed at securing supply chains for AI and critical minerals. NVIDIA is close to finalizing a $30 billion investment in OpenAI, replacing a previously announced $100 billion multi-year partnership, according to the Financial Times. Sam Altman sidestepped a question on NVIDIA when asked by CNBC TV 18, but reiterated that the company needs more compute. I cannot guarantee AI will create more jobs than it destroys, says Anthropic CEO Dario Amodei. Adds the AI industry needs to be honest about the job challenge to address the same. That's an exclusive. Swiss pharma major Novartis to sell 70% stake in its India unit to Chris Capital for nearly 1,500 crore rupees. Chris Capital will also make an open offer for an additional 26% stake. Novartis India shares rally in trade. The board of Agri Major UPL approves a business restructuring plan. The company plans to create two listed companies, with one being a pure play crop protection unit. Move is aimed at unlocking value and simplifying the structure. UK police searched the royal mansion as investigation over Andrew Mountbatten Windsor's dealings with convicted sex offender Jeffrey Epstein continues. The brother of King Charles was released 12 hours after his arrest yesterday. And the top story this evening, the US Supreme Court has ruled against President Donald Trump's global tariffs. The court has said Trump exceeded his authority by invoking a federal emergency powers law to impose his reciprocal tariffs across the globe. CNBC's Iman Javers brings us this report on the US Supreme Court's verdict.
That's right. The Supreme Court has now ruled against the President of the United States on this issue of whether his tariffs of 2025 were legal or not. Here's the key sentence from the ruling. The Supreme Court says the judgment of the United States Court of Appeals for the Federal Circuit, that is the lower court in this case, is affirmed. Now, remember, the lower court said that IEEPA, the law here in question, does not allow the president to unilaterally impose, revoke, pause, reinstate, and adjust tariffs to reorder the global economy. So the lower court said that the law here in question did not give the president that authority. And what we see here is the Supreme Court is upholding that lower court ruling. And I'm going to just find here another sentence, which is, I think, the key to the court's analysis here. And what they're saying is, based on two words separated by 16 other words in Section 1702A of IEEPA, the words regulate and importation, the president asserts the independent power to impose tariffs on imports from any country of any product at any rate for any amount of time. Those words, the Supreme Court says, cannot bear such weight. So what the Supreme Court appears to have decided here, guys, is that ultimately the IEEPA statute was about regulation of imports, not about tariffing of imports. And if Congress had intended for it to be about tariffing of imports, it would have said so explicitly. And because it did not, therefore, the president does not have the power to interpret this law in such a broad way as he did. Now, what is the impact of this? Immediately, this is going to set off the food fight of all food fights in terms of how companies that paid those tariffs last year get reimbursed. The president of the United States has said that the U.S. government will in some way have to reimburse those tariffs, but the cost is so high to the Treasury. The president has suggested that the U.S. government may not be able to do that. So what kind of a situation are we going to have for companies that are trying to get reimbursed this year? That's going to be a fascinating fight. Whether or not the government tries to slow walk that or find some loophole or carve out, We'll see deeper down in this decision by the Supreme Court if they've given any guidance as to how that process should work. We don't have that right now. That might be material for a number of these companies, guys. So as we look through this, what we're seeing here is a striking decision by the Supreme Court against the President of the United States. We're also seeing here a lengthy dissent here from Justice Kavanaugh. So we'll get into his logic on why he's dissenting as we dive deeper into this, guys. Back over to you.
A positive close to the week on Dalal Street. Sensex gained over 300 points and the Nifty gained over 100 points to reclaim the 25,500 mark. Mid-caps also rose in tandem with the blue chips. But IT stocks continue to remain under pressure. While the Sensex and Nifty managed to end the week in the green, the Nifty IT index lost over 2%. It has lost nearly 17% in just the last 3 weeks as fears of AI disruption hurt sentiment. Since the start of February, TCS is down 14%, Infosys is down 17%, HCL Tech down 15%, Wipro down 20%, and Tech Mahindra down 15%. But the industry is not pressing the panic button just yet. From N. Chandra of Tata Sons to Nandan Nilekani of Infosys, the industry believes the AI disruption presents an opportunity for the IT industry. Anthropic's CEO spoke exclusively to CNBC TV 18, saying that his company is not trying to replace industries and wants to work with all IT companies in India.
AI is a very, very important multi-decadal change. Every company has to figure out, has to ask fundamental questions. What is my moat? IT services companies, rather system integrators, will have a greater job, greater responsibility. One other point, but the companies have, IT companies have to do a lot of work.
Yeah,
like every other time, they've got to equip themselves with all the skills that are required. They've got to go through that.
You should still ask the question, what is the firm doing to take advantage of this? What is the firm doing to transform its talent for this new world? What is the firm doing to design the services and products for this new world? What are they doing to tell the customer in a way that it resonates? What are they doing to make sure that the front-end conversations with clients are done properly? These are all the issues, and I'm sure everybody will not execute the same way. So there is an execution risk in doing that. So it is not an opportunity risk, it's an execution risk.
I think it's overdone. I mean, a lot of things that I've read in the social media and all of that feels overdone. But we do recognize that this is a big disruption. And if you really go after it, there are so many new opportunities. So I think as an industry, we will get through this very successfully, and that's what I believe. And we have responsibility as leaders to really make this transition happen.
We want to work with essentially, we want to work with essentially, all the companies in India. So, we're going to aim to get partnerships with, all the household names that you could think of. They're in different stages of discussion, and Infosys was the one that was announced just yesterday. We're very, very, very excited for the partnership. I visited Infosys the last time I came to India in October.
All right, let's talk about the money market. The rupee weakened by more than 30 paisa against the dollar. The Indian currency is now closer to the 91 mark against the greenback. 10-year bonds also tumbled in trade, and the yields spiked by nearly 1%. The money market saw heightened trading activity today since it was closed yesterday. Now to the commodity market. Crude oil prices are on track to register their first weekly gain since January. This on the back of escalating tensions between the US and Iran. US has continued to amass military hardware near Iran. Addressing the inaugural meet of the Board of Peace overnight, US President Donald Trump said that he will decide whether to launch military strikes against Iran in the next 10 to 15 days. US envoys held indirect talks with Iran on its nuclear program in Geneva this week. US Vice President J.D. Vance had also remarked that Iran did not address red lines set by President Trump during the talks.
Good talks are being had.
It's proven to be, over the years, not easy to make a meaningful deal with Iran. We have to make a meaningful deal. Otherwise, bad things happen. They can't have a nuclear weapon. It's very simple. You can't have peace in the Middle East if they have a nuclear weapon. And they can't have a nuclear weapon. And they've been told that very strongly. They cannot continue to threaten the stability of the entire region. And they must make a deal. Or if that doesn't happen, I maybe can understand. If it doesn't happen, it doesn't happen. But bad things will happen.
Well, Indonesia and the U.S. have finalized a trade agreement under which U.S. tariffs on most Indonesian goods will be reduced to 19% from 32%. According to the joint statement, Indonesia will eliminate levies on more than 99% of U.S. goods. Washington has said it granted tariff exemptions on certain clothing and textiles from Indonesia that are produced with cotton and man-made material from the U.S. India has signed the final declaration to join a US-led strategic alliance called Pax Silica on the sidelines of the India AI Summit. Now, this marks a significant step towards expanding cooperation in artificial intelligence, critical supply chains and semiconductors. Pax Silica is a US-led initiative aimed at securing supply chains for AI and critical minerals. Ashmit Kumar joins us with more on this and how it could benefit India. Ashmit.
Well, to explain the significance, I'll borrow from the U.S. Undersecretary Jacob Helberg, who was present as a part of the signing ceremony alongside U.S. Ambassador Sergio Gore and Indian IT Minister Ashwini Vaishnav. What Jacob Helberg essentially had to say is that increasingly they are seeing that there are economic levers being used to pressurize sovereign nations, that is something that cannot be permitted, that economic security now in today's times is the same as national security. And to that end, we saw this Pax Silica initiative being launched by the United States in December 2025. The fact that it comes after the critical minerals crisis is no coincidence. While there was no reference made to the country of China, there's a very clear indication that there are certain levers being used by countries which are pressuring other countries. And to that end, the US had launched this initiative of like-minded countries. So the countries that count themselves as a part of Pax Silica, including India now, are countries like UK, like Australia. We have countries like Israel, Singapore, Japan, South Korea. These countries are increasingly forming an alliance for all things related to AI, for all things related to semiconductors, for all things related to critical minerals. There's a growing concern among these countries and a growing understanding as well that there's a need for interdependence, that one country can't do everything, and to that end, ensuring that there is greater cooperation. What this essentially means for India is that there is now a clear runway when it comes to supply of advanced chips. India is in the midst of a data center build-out. This is something that will be important. India is also in the midst of a semiconductor build-out. We've already seen 10 facilities being approved. ISM 2.0 is around the corner. This will also ensure greater cooperation between countries like the US as well as India. So a net positive as far as India is concerned. And what that translates into, in fact, we met up with Mr. Sanjay Mehrotra, the CEO of Micron Technologies. Let's hear what he had to say.
I think it's a great summit bringing together leaders from all around the world, business leaders, government leaders, and Pax Silica is a great example of US and India technology collaboration, particularly advancing semiconductors and building AI infrastructure.
What are the benefits, sir, that India can hope to realize from this association with Pax Silica?
Of course, focus on semiconductors, building advanced supply chains, partnering with US and together building the infrastructure for AI and the future for a future for all good for humanity.
All right, Adobe CEO Shantanu Narayan says India has leapfrogged several nations in AI adoption. Speaking to CNBC TV 18, Narayan said Adobe is betting big on India's AI ecosystem.
It's been amazing. When you see the excitement around AI, I think India has really dramatically leapfrogged others in terms of adopting digital technology. And so when you see the monthly average users of all of these new technologies, it's clear that India is shepherding and leading that revolution. And so the first and foremost that I'm excited about is the fact that people are saying, that they want to understand how AI can improve whatever profession they're part of. So that's exciting.
Finally, India and United States have agreed on an interim trade deal. That's a big relief. Your thoughts on how this could bring businesses together and give more certainty to businesses on both sides?
Well, I think at the end of the day, it's the power of the two economies. I mean, business speaks. And when you take, the country that has the highest, sort of GDP in the world, and you take a country that's rapidly getting there, magic is going to happen. And so I'm actually really pleased that that's behind us, and we can focus on continuing cross-border trade.
Now, NVIDIA is in talks to invest up to $30 billion in OpenAI. This investment could value the startup at $730 billion. According to Financial Times, this deal will replace a previously announced $100 billion multi-year partnership. The reports have further stated that the $30 billion deal is not final and the details are still subject to change. While speaking to Shireen Bhan at the AI Summit, OpenAI's Sam Altman sidestepped a question on NVIDIA but reiterated that the company needs more compute.
Those are big issues, but the number one issue being asked of leaders like you, how sustainable is this business model? The gargantuan spends that companies like yours are making, is it code red at this point in time?
I think, I may be wrong, but if AI stays on the trajectory that it appears to be on, I think we will say, man, we wish that people had invested more earlier and built out more infrastructure earlier. Clearly, the industry is making a very big bet on this mission of democratizing AI. That's part of why we think we need to invest so much, and we need to make AI so inexpensive, so abundant, so good, such that people can use a ton of it for whatever they'd like.
Do you feel comfortable where you find yourself financially today?
I wish we had more compute. But yes, I feel...
Will you have more compute, and what's the latest as far as the deal with NVIDIA is concerned?
We are building compute as fast as we can. Yes, we'll have more compute over time.
Meanwhile, Anthropic CEO said that it's hard to assess how AI could disrupt jobs. However, while speaking to Shireen Bhan at the AI Summit, he added that it's important to skilling workforces to adapt to the change that the technology will bring.
How much of AI washing are we really seeing when we talk about job losses today?
Yeah, so, I think it's really hard to predict. The economy and economics is hard to predict. So it's hard to say, will jobs go away, or will they be downskilled, or will they be moved in kind of a different direction? So the exact form that it takes, I don't know. What I do know is there will be potentially a lot of disruption because the technology is moving so fast. What is different about AI than previous technologies, it's not any different in that, there's some things humans could do before that, this new technology is now able to do, that's able to replace parts of it or all of it. What's different is it's moving quickly and it's broad because AI is a general technology. And so what we need to do, I think, more so than trying to figure out exactly what form the disruption will take, is help people to adapt.
Now, 4 Youth Congress workers were arrested for staging a protest at the venue of the AI Impact Summit in New Delhi. The workers stormed the AI Expo Hall with posters and chanted slogans against the Prime Minister and the government. In a statement, the Indian Youth Congress said its workers were protesting against, and I quote, a compromised Prime Minister who has traded the identity of the country at the AI Summit, unquote. Now, top union ministers and BJP leaders slammed these protests.
It really shows that the Congress party is bereft of any positive program or nation-building ideas. The Congress party is humiliating India on the global stage, and I squarely hold Mr. Rahul Gandhi responsible for this shameful behavior.
The Supreme Court has directed the Calcutta High Court to appoint serving and former judicial officers to adjudicate claims and objections in the special intensive revision of electoral rolls. The judicial officers are to perform the function of the electoral register officers in the process. The top court said the step was warranted given what it called trust deficit between West Bengal's Chief Minister Mamata Banerjee and the Election Commission. Commerce Minister Piyush Goyal has said that the first tranche of the India-US bilateral trade agreement is likely to be operationalized by April this year. Goyal also said that the Indian negotiators are set to visit the US on the 23rd of February. Speaking on the sidelines of an event in the national capital, Goyal added that the India-EU free trade agreement will be operational by the end of this year. The FTA is yet to be ratified by several countries of the EU bloc and the EU Parliament. And speaking of the India-USA interim trade deal, U.S. Ambassador to India Sergio Gore says the executive order reducing tariffs on India to 18% will include a number of aspects and will happen soon.
I think we have a great relationship. I think it comes down to multiple things. The first thing is the great friendship between our president and your prime minister. The signing will happen very soon. In fact, even this week, we have both teams are talking to each other and actively getting to a place where both will be able to sign. Look, the reality is there's tens of thousands of points. We're not dealing with a small country. This is one of the biggest economies. And so we're thrilled that the interim deal is done. You have the few tweaking points that are left to do, but it's done. So the signing will happen sooner than later.
Now, the U.S. envoy also said that officials from India and the U.S. are in close touch over the purchase of oil from Venezuela. Now, Sergio Gore added that the U.S. has seen India diversifying its crude imports, and President Trump wants countries to stop purchasing Russian oil. MEA spokesperson Randhir Jaiswal has said that the government is exploring buying Venezuelan oil.
We have seen India diversify on their oil. There is a commitment. This is not about India. The United States doesn't want anyone buying Russian oil. The president has been very clear on this. He wants this war to end. And so anyone who is, in a way, still involved with that conflict is something that the president wants to see come to an end in hopes of peace coming with that. On the first part of your question, that is also, there's multiple mechanisms. It's not one executive order. So that is making its way through the pipeline. The executive order specifically on oil was already signed. So that's done. The second part of it on the tariffs being rebalanced, there's multiple things. It's not just one piece of paper. It's multiple things, multiple departments, multiple areas. And so that'll also happen very soon.
Look, on both Russian oil and on Venezuela oil, we have issued statements. We have made our position very clear. So I would once again request you to look at what we have said in the last few weeks on both these subjects. On Venezuela, we had said that if it is commercially viable, then we can explore buying oil from Venezuela.
All right, coming up on India Business Hour, Swiss pharma major Novartis to sell 70% stake in its India unit to Chris Capital for nearly 1,500 crore rupees. Details in a bit. And you can also catch all CNBC TV 18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Do subscribe to CNBC TV 18 Access for exclusive stories.
This is Network 18, and you're watching CNBC TV 18.
In our country, in India, we are working on all the 5 layers of the AI stack. The first layer is the application layer. We sincerely believe that ROI will come from this layer. And this is where the real benefit will flow to the masses in line with our Prime Minister's vision. That is why we are building real-world solutions in healthcare, agriculture, education, logistics, design, financial services, every sector wherever the benefits can reach the masses. We treat compute as a public good, and that's why in a public-private partnership, we have created a common compute platform where we are providing access to 38,000 GPUs at a very affordable rate for our startups, academia, researchers, and students. And we will be adding another 20,000 GPUs to this common compute platform. Recently, our Honorable Prime Minister has announced during the budget a very big policy shift towards getting the world's data to India, to reside in India, to be processed here, and to deliver high-value services to the entire world. We expect large investments in data centers in the coming months.
But how significant is India for OpenAI specifically? It is your second largest market today.
It is our second largest market, and the energy here that people are, what people are building with the technology is just amazing to watch. We have more than 100 million weekly active users of ChatGPT. This is the fastest growing market for codecs. And it's amazing to see the energy here. Every time I come, it feels like it's gone up another level.
You know, Sam, you've also shared the stage with Pratyush Kumar of Sarvam. The last time you were here, there were questions being asked on whether India can do an LLM. Have you had a look at what Sarvam has been able to put out?
India's, yes, but more generally, India is just building incredible AI, the entire AI stack, from, like data centers to models to applications. And I think there's no country in the world.
Right, agrochemical company UPL has announced a restructuring of its businesses into two listed entities. As part of the plan, UPL Sustainable Agri Solutions will be merged with UPL. Now, the company will also demerge its India crop protection business into UPL Global Sustainable Agri. A home decor brand, Live Space, has fired at least 1,000 employees, representing 12% of its staff. According to Money Control, one of its co-founders, Saurabh Jain, has also quit the company. The company has said that it's reorganizing internal operations to become an AI-native agentic organization. The decision has impacted employees across verticals, including design, sales, operations, and marketing. Shares of Novartis hit upper circuit after the Swiss pharma major Novartis said its plans to sell 71% stake in its India unit to Chris Capital for nearly 1,500 crore rupees. Chris Capital will also make an open offer for an additional 26% stake. After the transaction, Novartis AG will cease to be the promoter of the company. The acquirers will assume control and be classified as the new promoters. Speaking to CNBC TV 18 at Davos, Novartis CEO Vas Narasimhan said that the company's commitment to India was absolute.
It's really interesting how much focus there is on our company structure.
Yeah.
It doesn't change Novartis' commitment because Novartis AG is committed to India. These are all kind of structural things with our legal entities. So no change in the strategic review of how to structure ourselves. But the most important message I would want to get to all of the viewers, Novartis' commitment to India is absolute. We have over approximately 10,000 people now. We have 25 years in the Hyderabad area now with our Novartis corporate center there. And that commitment is long-term, and that's not going to change.
All right, on to the big international update that we're tracking. Andrew Mountbatten Windsor, the younger brother of King Charles, was released from police custody Thursday after being questioned in a misconduct investigation. He was questioned by Thames Valley Police over allegations that he shared confidential government documents with Jeffrey Epstein while serving as a UK trade envoy. UK police are searching the royal mansion. Meanwhile, President Donald Trump called the situation very sad and a shame to the royal family. Trump also added that he had been totally exonerated. And with that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV 18.
This is Network 18, and you're watching CNBC TV 18. This is Network 18, and you're watching CNBC TV 18.
India is a nation of AI optimists. Our enthusiasm is not surprising. Indians have witnessed the hugely ambitious digital infrastructure programs and what they can achieve. Over the past few years, under our Honorable Prime Minister's vision, India has treated AI as a strategic national capability, aligning the full stack from chips to systems to energy and to applications.
At the Tata Group, we are adopting AI across the stack, from silicon to systems to AI-ready data centers to applications and AI agents. And we believe such a vision and such a journey is going to be extremely exciting, and it will require us to work with world-leading partners in India and across the globe.
Geointelligence will build India's sovereign compute infrastructure through three bold initiatives. One, gigawatt scale data centers. We already started construction on multi-gigawatt AI-ready data centers at Jamnagar. Over 120 megawatts will come online in the second half of 2026 this year, and a clear path to gigawatt scale compute for training and large scale inference.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship.
Young Turks at 22. Only on CNBC TV 18 and CNBCTV18.com.
CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. To get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day.
Let's get
embroiled in that controversy already this week about the reporting on who actually pays the cost of the tariffs, which we already frankly knew who did. It was just confirmed yet again by another report.
Yeah, I mean, look, Scott, the big question in my mind about this press conference that we're going to see in about 40 minutes' time is this going to be a reaction press conference, or is this going to be a rollout press conference? Remember, this was the expected outcome of this case, and it has been the expected outcome of this case for some months now. So the White House has had a lot of time behind the scenes to think about what they're going to do. They've said they have all these other authorities under the law to impose tariffs. Will we see at 12:45 sort of a policy rollout of the new tariff authority by this administration? All these old authorities that the administration can lean on do require, some time frame, some process of an investigation, some other mechanics that make it slower and more bureaucratic to impose tariffs. But the president can impose tariffs through these other means. So is that what we're going to see? Or are we going to see the president coming out and just denouncing the Supreme Court and saying why this is a terrible idea? We'll wait and see.
Maybe a combination of both, but we will. Right. We will wait for the president. Eamon, thanks for your reporting. Appreciate that.
You bet.
It's Eamon Javers down at our bureau in Washington. Let's kick this around. I mean, I told you what's been sort of moving here, unsurprisingly, discretionary, industrials. How are you thinking about this, Jimmy?
As you just said, first and foremost, it's not a surprise. Just the oral arguments 3 months ago indicated this is the way the court is going to go. So the markets don't like surprises. Not surprising, the market is up. But what this means is in the short term, trade policy uncertainty increases. In the long run, it decreases. But just consider this for a second. There are a number of trade deals that have been done with countries over the last several months that are now drawn into question. South Korea has been dragging its feet on a trade deal that was agreed to, at least verbally. And now I think we know why. They thought this was the ruling that was going to come out. Japan just this week got started on some of the investments it made, but maybe they're going to start slow walking as well. Now, in the end, there is going to be longer-term policy certainty increase because of this. We'll see what the tariffs are that the government, that the presidential administration is going to use, what statutes they're going to use at this press conference. They're going to be lower tariffs than what was, the president could come out on any day and say, I'm going to charge 150% tariffs on China. This is good news that he can't do that anymore. The statutes that are being looked at have limits to them, like 15%. So, the markets should like this because people like me, Kevin, Josh, Bill, are not going to wake up in the morning and say, oh, my goodness, one of my companies is in the crosshairs of what the president likes or doesn't like.
Yet, Josh, as we, were just discussing with Eamon, the prospects of this now being a quote unquote mess to figure out has just broad implications for, potentially how the markets and the different sectors within it react based on what sort of outcomes probabilities are given to.
You know what? I think I agree with everything Jim said. I just don't know if I agree with the conclusion. I actually don't think this is as positive to the market as most people would have thought it had been. Like, for example, if this ruling had happened 6 months ago, I could see a scenario where the Dow rallies 1,200 points. Because 6 months ago, this was like the #1 overhang, especially with respect to metals and mining, industrials, even pharmaceuticals, automobiles. Like, this was really a huge issue, psychological issue that the market had been wrestling with. And you remember, you would hear like Lutnick do a CNBC appearance, and you would see the futures swing massively, either up or down, based on what he was saying on this issue. And where I slightly disagree with Jim is I just don't think that this issue holds as much power over the market as it did. I think we sort of just got used to it. And yes, there were winners and there were losers. And now we're having like rebukes of economists who said that this would lead to some sort of problem for the economy. The reality is, I think the market looked at this as, all right, great. If the tariffs come off, or are modified in some way, or if there's a court challenge, that'll be a mild positive. And that's what I think you're seeing playing out. Right next to me, you see the S&P barely mustering 0.5% in rally. Because now the next phase of this is more saber rattling, more speeches, more Lutnick appearances, and then Trump appearances. If you know anything about the Trumps, they're not going to go away. Like, this isn't, oh, I guess the court ruled against me, therefore I give up. LOL. So now what happens is we go back to the environment of 6 months ago, where we have to have this roller coaster ride every day about who has the upper hand in this issue. So I don't know if it's bullish. And the market is telling me today it's not.
Yeah, Bill, there are just so many different aspects of this. Companies had grown quite adept at dealing with the tariffs, right? They hadn't really passed on a lot of the costs to consumers. They figured out a way to have some of the, their importers pay a greater share. Just this week, I think it was the Wall Street Journal, we were reading stories that were suggesting that companies were reaching the point of, enough is enough. Now come the price increases. But now with a ruling like this, well, maybe you don't have to have the price increases because now all of a sudden you don't have to worry about tariffs in their purest form, the way that they were originally rolled out by the administration. So it does introduce some level of uncertainty on the corporate front.
Yeah, I do believe there's some uncertainty. And here's the thing. Go back to last year. There was an expectation that this ruling, or the turn of the year, there was an expectation that this ruling was coming. And I think a lot of companies dealt with the tariffs, throwing a Band-Aid over it. And the Band-Aid wasn't working anymore because there was also talk up until about a week ago that we may not get this ruling until the summer. So now we have it. What I'm looking at, too, is go back to last year as the pace of inflation, the rise in inflation, came down. The Fed kept pushing back on rate cuts because of the tariff prices that are coming down the pipeline. What did we get this morning? Core PCE was hotter than expected. The Q4 GDP PCE prices hotter than expected. What does this do? I mean, we had stagflation data this morning with GDP itself coming in lower than expected and prices higher, and then we had flash PMIs worse than expected. This came right when we needed it. Although there's more uncertainties that are now going to bubble under the surface, this came for the market when it needed it, because you're now going to get seemingly prices coming down and paving the way for the Fed to cut rates. Kev?
Yeah, I think the clarity issue is the biggest deal here. I wasn't expecting to get the news as quickly as we did on Friday, but great that we have. I like Josh's take on the idea that this would have been more impactful had it happened 6 months ago. I totally agree with that because we've had so much time to digest it. I am surprised that the market's not responding more. Maybe somewhere between 100 and 1,200 points would have been a better outcome here out of the gate. And maybe we still get that as we cycle through and parse through everything. But the real uncertainty is how you unwind this. You know, they use the word mess, so did you. I think that's probably the understatement of the day. We know that when we see the press conference in 40, 45 minutes, it's going to be a beratement of the Supreme Court, and then it's going to be an introduction to Plan B. But I like your idea, Jim, where it's going to be a reining in of what they can potentially do.
I feel like we need to hear from our senior economics reporter today as well on what the implications are for the path ahead on rate cuts potentially. Steve Leisman, of course, joining us now on that. In a week in which, Steve, we've learned from the minutes that we have, as you described earlier in the week, three camps on all of this. We already know that one of the reasons why the Fed might have been reticent to continue to cut at the next meeting was because of expectations that you could still have ramifications from the tariffs filtering through the system and lead to another move higher in inflation. This just introduces something interesting into the room now, doesn't it?
It sure does. And before I get there, Scott, I want to look at today's PCE number. And if you do, you look at the goods section, you see that it's up, and the biggest year-on-year increase we've had in the goods section since the pandemic, 1.74%, 2% if you drill in and see what's happening with durable goods, which are more likely to be affected by tariffs. Obviously, not all of these goods are tariff affected, but the bottom line here is you can see that slope from bottom left to upper right. The tariff impact is increasing, kind of underscoring what was written in that Wall Street Journal story, that it's going to be coming in the months ahead. I've always thought, Scott, of tariffs of having really three taxes: the tariff itself, the uncertainty tariff, and the complexity tariff, or the complexity tax. I don't know that a whole lot of that goes away. Jim is absolutely right that the other alternatives to that the president have allow for lesser tariffs, but they still allow for tariffs. So I'm not sure the uncertainty goes away for the market or for the Fed, or the complexity goes away for business, which has been a big part of what the impact has been. So we'll wait and see what happens and what the administration says. It was the reason why the administration should have never done it this way. A business-friendly administration would have done tariffs in a way that created some certainty. Now it's all up in the air again. We wait for 12:45. We have Scott Bessent, the Treasury Secretary, talking at 2 o'clock. All of those are going to be very significant as to whether or not we get any clarity. And I think Josh is right that 6 months ago would have been more important. But I also think the lack of clarity from the administration's response is a reason why the market reaction has been muted.
It is a new level of uncertainty to some degree, whatever that might be. And Steve, I wonder if, as a result of that, it merely has the prospects of pushing Fed cuts even further now down the road, because now we don't really know what the reaction is going to be from this administration. And once we even learn it, is it going to be challenged? What actually is the policy that goes into effect? Thus, the Fed needs to potentially take this even further out, wait and see approach to see how everything transpires.
Yeah, and I don't know, Scott, in all the breaking news, if we had a chance to prepare our Fed probabilities, but I'll read them to you. You're down now at a coin toss for June for a rate cut. And that is remarkable in the following sense. June is the first meeting of the new Fed chair. So the idea that the market thinks that a rate cut in June is a coin toss just tells you how much uncertainty that either this ruling by the Supreme Court, along with the higher than expected PCE number, is casting on the views of the Federal Reserve. And I'll just tell you what the other numbers are, Scott. By July, that first cut is priced in, but you have to wait till, I don't know, October or December to get a second cut. So yes, it does change the view at the margin of the market's outlook for the Federal Reserve and rate cuts.
That's very interesting. Steve, thank you. I'll see you again at 3 for certain. That's Steve Leisman, our senior economics correspondent. That's interesting. If I told you, okay, well, whatever your expectation is for future rate cuts, dial them back.
Yeah.
At least as we sit here today. Now, others would say we didn't need the Fed in the first place anyway because, despite the lower than expected GDP report that we just got, the economy is still poised to perform well. And most importantly, many would argue, earnings have been really good. You've gotten, your double-digit earnings growth, and the prospects of continuing to do that are high enough that the Fed is sort of an afterthought. You don't want it to be working against you, but you may not have the wind at your back that you once thought you might.
It shouldn't be working against you. I don't think we need the wind in our sails from the Fed. And the Fed is going to have a problem in front of it of potentially $200 billion of tariff rebates coming into the economy. And even for a $30 trillion economy like ours, that's a lot of money. There's also going to be upward pressure on the curve from more deficit financing that's necessary without the tariff money coming in. So I'm not surprised that the odds of a rate cut have gone down. I am strongly of the camp that this is a market that doesn't need rate cuts. But by the same token, we better make sure that things don't go the other direction. I don't think they will. The absence of tariffs or the reduction of tariffs should keep inflation in check. I just have to say this, Scott. I think in the long run, another reason I'm positive is the Supreme Court cited Article 1 of the Constitution, the separation of powers. The Supreme Court just laid down a line and said, this is as far as you go with the extension of executive powers. The markets are going to like that. We've been in this strange sort of multiverse world of the president does whatever he wants. There are limits now.
All right, let's talk about some moves that we get. Let's get away from the implications maybe of the decision and all of that and what we think the remedies could be and everything else. I do have some moves that, obviously not directly related to this, are relevant because you bought more United Rentals. We're thinking about, industrial type names. Kevin sold Wayfair. Now, you sold this again before the decision came out. But now I just wonder if you rethink or double down on your thoughts regarding the move that you just made.
We didn't buy more United Rentals today because of the news. This was on our radar. We've been patient here after an earnings miss and watching this thing sort of bottom out. It has a lot of support from the VWAP, from the closing high. Now, this is the catalyst for this thing to run are numerous. I mean, you got U.S. energy expansion, grid modernization, U.S. infrastructure, the big beautiful bill. It'll help middle market manufacturing, industrial CapEx spending, and this stock has performed overall very well without a U.S. energy CapEx cycle. So, all around, we're looking at the backlogs. We're looking at a lot of tailwinds here for this name to really make a good run over the next few months.
So, as I said, you sold Wayfair. The company yesterday posted its first annual sales gain since 2020, outperforming the overall furniture market. I wonder what you think. It did get downgraded today, by the way, Gordon Haskett. But what about this move that you made?
Yeah, we couldn't have scheduled it better. I was looking at the pre-market or the early trades, and it was up $5 at the time.
Better or worse? That's what I'm asking you now.
Yeah, I mean, I feel worse about it, but we run a rules-based process. We were stopped out of the stock yesterday. I still love the company, but I'm just a little bit concerned that if the consumer's slowing down, that the home furnishings market might be one of the things that slows before, food, shelter, housing. And this is a company that has improved their margins. The numbers were okay. I still think it's a good company. But at this point, I'm okay. I don't have seller's regret. But I'm rooting for it, and we can certainly look at it down the road.
What's funny, Josh, is that before we got the decision, we're like all bulled up to lead on this idea that Citi downgraded tech today. As we finish this week, where we're assessing the durability of that trade, and we're looking ahead to NVIDIA earnings next week, which are the next big event that could have an impact on where the sector trades. They downgraded technology today, along with discretionary, and they have moved 50% of their U.S. allocation into small caps. Now, the Russell is leading on the year, 7%. It's like blowing everything else away. What do you make of that call today from Citi?
You know, a lot of people would make fun of that. They'd say, oh, okay, so you have like 50 mega cap tech stocks that are down 30% and you're downgrading it today. But I don't disagree with the wisdom and the timing of the call, because I do think that we're going to be in for a frustrating year for tech. It doesn't mean that all the tech stocks are going down. I own a bunch of them. I just think a lot of rallies are going to get sold because the negative overhang about the biggest theme in tech, which is obviously AI adoption and AI capex, like that negative miasma that we're like all living under this cloud of, it's not going to dissipate. And if anything, in certain areas, the uncertainty is going to only grow. It's almost impossible to envision a scenario where it doesn't. And so much of tech market cap is software, and so much of tech market cap is hyperscaler. And those questions are increasing, not decreasing. We get periodic breaks, and we see like a green day for the software names, and everyone goes, oh, thank God, it was such a huge overreaction, it's finally over. It's not. We know it's not. It can't be. It's too soon. Nobody feels good about any of this stuff. So